Chip stocks are looking to regain footing after a volatile week for markets. Semiconductor ETFs in particular bearing a bit of the brunt of the market rout last week. But let's focus on the chip giant Nvidia, losing over $900 billion in market cap since its prior highs back in June. It did recover towards the end of the week and does continue to rise as investors anticipate earnings coming up in a few weeks here. So joining us to discuss what is next in the chip space, we've got John Vinh. He is KeyBank's Capital Markets Equity Research Analyst. John, it's great to speak with you. So obviously the volatility impacted the entire market, and chip stocks, of course, were a part of that. What do you think will be the single biggest driver of chip stocks moving forward in the next couple of weeks as we do wait for those Nvidia earnings?
Yeah, I think you're going to have maybe a couple earnings reports before Nvidia. You've got ADI reporting next week, which obviously is going to be a read on the broader recovery from a cyclical perspective. But I think outside of that, I think all eyes are going to be focused on Nvidia's earnings in 2 weeks.
John, what do you think we're going to hear from Nvidia? Because we talk about the lack of catalyst between now and then. Do you think they're going to meet and exceed expectations, which is ultimately the huge question right now?
Yes, we do. I think if you look at the sell-off over the last several weeks related to the chip sector, and maybe more specifically to Nvidia, I think one, you have some concerns about maybe hyperscale capex getting to kind of peak levels, but I think those were largely addressed later when you had comments coming out from Microsoft that it's still seeing phenomenal demand on the AI front, and it's actually supply constrained. And then obviously the second factor is, there's some concerns out there that its next generation Blackwell product could be delayed. I wouldn't find that too surprising. They're on an annual chip cadence, which is something that's really never been done before within the AI industry. Typically, you're on a 2 to 3 year cadence. So if you're kind of moving to an annual cadence, I don't think that's surprising. And I think investors, if it's really a supply or timing issues, I think most investors are willing to kind of look through that. If it was a demand issue, I think we'd have other issues here with Nvidia. But from our perspective, we think they'll beat and raise. We don't think near-term demand is going to be an issue at all.
Nvidia has had a difficult month amid a market sell-off focused on large tech firms. The stock has gone off significantly since it reached $135 per share in early July, and it is currently trading slightly around $100 per share. Given that it has dropped by almost 30% from its peak, Nvidia stock is in its own bear market. Some investors would become alarmed by this, but others might see it as an opportunity to purchase the stock at a lower price after missing the early spike. So is it time to buy Nvidia stock? Or is this a fair adjustment to the price? There are two long-term factors affecting Nvidia's stock price. A trading method that led investors to borrow Japanese yen at cheap interest rates and then use that money to invest in some of the most dominating tech stocks in the U.S. market, like Nvidia, is partially responsible for the larger stock market sell-off. Anyone doing this is selling their shares to return the money before higher interest rates take effect, as Japan has announced it is raising interest rates. Furthermore, some people believe that the U.S. Federal Reserve should be lowering interest rates and that it is otherwise sleeping at the wheel. Many people worry that we may be entering the early stages of a recession given the steady increase in unemployment. Although the current challenges aren't helping Nvidia investors, they do give long-term investors an excellent opportunity to increase their investment at a discount. Including these issues in the long-term investment thesis is illogical because they won't halt the spread of artificial intelligence, AI. As the AI arms race heats up, Nvidia has gained substantially over the past year and a half since it is the leading supplier of graphics processing units, GPUs, which provide the computing capacity required to train AI models. Since this isn't expected to slow down anytime soon, investors should concentrate on expanding the AI infrastructure. But is the sell-off significant enough to make purchasing Nvidia stock worthwhile? With all these developments under consideration and analyst predictions, we'll talk about target projections and advice in today's video, so make sure not to miss out. However, before you do, if you'd like to stay up to date on Nvidia's most recent updates and the most recent news from the stock market, you can subscribe to our channel. We publish daily updates about the biggest shifts in market catalysts, so click the bell icon button to ensure you don't miss the most recent updates. All right, back to today's video.
Nvidia shares are up nearly 5% today and more than 9% despite last week's sell-off. While the volatility left some investors wary of the big AI names, our next guest saw the dip as a buying opportunity, upping his stake big time. Let's bring in fast money trader and Grasso Global CEO Steve Grasso. Give me the deets, Steve. It's good to see you.
How you doing, Kelly? Yeah, this could have. I always love hindsight when it proves you're right. This was a binary instance, though. This could have went very bad against me if the macro market sold off. It didn't, so I look great, on a micro basis after the fact. I own Nvidia. I originally owned Nvidia, I should say, in the 120s was my average, and I expanded that position considerably. So now my average is around 102. So that's how much I was buying on that dip. Once again, that dip could have gained more strength. Market could have sold off more precipitously. It didn't. So once I started to see the market solidify, I really leaned into that position for Nvidia.
What's the exit strategy?
Yeah, so normally, when those of the people that follow me on Twitter or watching on Fast Money, I usually trade around a core position, which means that I'll have my core positions and then I'll trade tails around it. The tail actually became the core. So I think that the stock probably trades back up to the 120 range, and shorter term, obviously 115. That was just a blink of an eye of where it was today. So I think you're going to see higher prices. I think the market has to perform well. Market doesn't perform well, this is definitely a momentum stock, but I think you're going to see a 120 print sooner rather than later in the name.
Yeah,
Right present, Nvidia's stock is in the buy range. Since Nvidia is growing and changing so quickly, valuing its stock is really challenging. The forward price to earnings P/E method, which evaluates the company using analyst earnings estimates for the ensuing year, is the most effective way to value it. This is the most effective technique to evaluate Nvidia, despite its flaws. Nvidia trades for a pricey but far more reasonable 36 times forward earnings as a result of the sell-off. It's still not a bad pricing, even though this simply resets the value to late May levels prior to its first quarter earnings report. Considering that Nvidia is trading at 35, 31, and 30 times forward profits, respectively, its larger tech competitors Amazon, Apple, and Microsoft aren't all that much less expensive than Nvidia. Furthermore, it appears that Nvidia might be a purchase worth making because they don't have nearly the same growth potential. Ideally, you should purchase Nvidia stock by August 28 if you plan to do so. Nvidia's stock has surged following nearly every earnings report going back to Q1 FY 2024. On that date, the company will release its Q2 fiscal 2025 profits. In light of the recent market sell-off and Nvidia's excellent news, this is a wonderful time to purchase the stock. We'll compare NVDA Corporation's performance to that of the other humanoid robot stocks. It's safe to say that 2024 will be remembered as the year of technology. Despite the accusations of its harshest critics, artificial intelligence has managed to endure, and in its wake, it has sparked the revival of numerous sectors. Robotics is one such industry. Similar to artificial intelligence, robots have always been associated with science fiction. They're also growing closer to reality faster than we can imagine, much like AI. So what does this really mean for Nvidia's stock? Let's find out. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button, subscribe to the channel. This goes a long way in helping us grow. That said, back to the video. AI remains worth watching segment for global investors in 2024. But how do you keep up with the AI sector and others that you may be interested in? I recommend trying Moomoo, a sponsor of today's video. Some features to discover stocks with investment potential has blown me away. You can use the industry chain to find companies throughout the entire AI sector, or use the stock screener to filter stocks according to your investment strategy. Having the option to set parameters like industry, market indicators, financial indicators, technical indicators, and more. Ultimately, discover potentially undervalued stocks and those that appear to show buy signals to help inform your strategies in an effort to capitalize on ad-related opportunities. At the same time, Moomoo is one of the cheapest trading platforms I've found. It offers zero commission on stocks, options, and ETFs. After comparisons, I've discovered the fees are among the lowest. Right now, new users who open an account using my link and make a qualified deposit can get up to 15 free stocks, enjoy a limited time 8.1% APY on idle cash for 3 months, and earn up to $300 cash reward for transferring in their portfolio. These rewards can be earned together, so don't miss out. And thanks again to Mumu for sponsoring this portion of the video.
Physical world.
NVIDIA's accelerated those applications by building an ecosystem for humanoids to run on. It combines high-powered chips that process data at high speeds with something called the Omniverse, a type of metaverse that allows users to train robots in the digital world for skills applied in the real world.
When you create a digital twin, you're able to simulate all of this in the digital world and then put it in the physical world and vice versa. So doing it in simulation is absolutely mandatory because it's faster, safer, and cheaper. In simulation, I could put 1,000 or 1,000,000 humanoids and I can test a different version of the algorithm in parallel. So just compute.
So fast, Deeputala says NVIDIA's doubling its computing capabilities every 6 months. Now the company's developing foundation models to speed up the pace of learning, so robots can copy any human movement just by observing.
Can you give me a high five?
Sure thing. Let's high five.
Can you give us some cool moves?
Sure. Check this out.
Before, when we used to do an AI model for doing a particular task, we had to train it with specific data for that task. And if you needed that AI model to do something different, you needed to retrain that model. Generative AI is this kind of like general purpose foundation model based where you're training on vast amounts of data for many different tasks. It's one model though. We are basically able to train the robot using text input, or it can take speech input, or it can take live demonstration or videos from the internet.
Tala says that technologies fundamentally change the use case for humanoids. It's no longer about robots that can perfect one task, but general-purpose robots that can do multiple tasks and learn to do even more.
My prediction is next year we'll have over 1,000, maybe a few thousand Optimus robots working at Tesla.
Elon Musk is racing ahead with his own plans. At Tesla's Fremont factory, Musk says 2 Optimus robots have already been deployed. He predicts there will be 1 billion humanoids working 2 decades from now.
Autonomous transport is called sort of a $5 to $7 trillion market cap situation. Optimus, I think, is a 25, literally $25 trillion market cap situation. So.
The private business Boston Dynamics, whose robot dogs are utilized by many industrial customers, including SpaceX, has produced one of the biggest advances in robotics. Though amazing, Boston Dynamics robot dogs fall further into the realm of science fiction than humanoid robots, or robots that resemble humans and carry out human-like mechanical tasks. These robots, which have become popular thanks to films like the Terminator series and iRobot, are actually a multi-trillion-dollar market, according to analysis from Wall Street experts. According to a Morgan Stanley research paper that offers one of the most upbeat perspectives on humanoid robots, there will be 40,000 or so humanoids in the world by 2030. If this seemed remarkable, just think about how astounding and exponentially greater the forecasts for 2040 and 2050 are. The population of humanoids may reach an astounding 8 million by 2040 and 63 million by 2050, which would be more than 27 of the 50 most populous nations on Earth in 2024. Financially speaking, the 63 million robots are expected to have an impact of $3 trillion, while the 8 million people are predicted to have a pay impact of a cool $357 billion. This study expands on the total addressable markets for sectors of the economy that are vital to the world yet struggle with a labor shortage because of limited funding, poor compensation, and tedious, risky jobs. These industries are categorized into 3 tiers, and a total of 21 are identified. Humanoids are predicted to be adopted in the first tier or Tier 1 as early as 2028. The construction and extraction, production, farming, fishing, and forestry, as well as building and grounds clearing maintenance, are the top 4 industries in terms of the total adoption percentage, or the number of jobs in these areas that might be filled by humanoid robots. The adoption potential of the risky industries mentioned above is 70%, 68%, and 67%, respectively. The Tier 1 industries have the biggest potential financial impact, and in the near term, that potential is quite low. The salary impacts for the Tier 1 industries for the years 2030, 2032, 2034, 2036, and 2038 are $1 billion, $6 billion, $19 billion, $60 billion, and $158 billion, respectively. Industries in Tier 2 begin to feel the effects in 2040, and industries in Tier 4 start to feel the effects in 2044. However, even if their widespread use may be years off, one of the riskiest use cases, space exploration, has already witnessed the deployment of a humanoid robot, NASA's Robonaut, who lived on the International Space Station, ISS, from 2011 to 2018. NASA launched Robonaut into space for the first time in 2011, updated it to Robonaut 2 in 2014, and returned it back to Earth in 2018. When it comes to humanoids, Morgan Stanley is particularly bullish about the social care sector. According to this belief, social care may become the largest TAM in the world by the end of the century, but it suffers from funding restrictions that make it difficult to provide incentives for hiring or reskilling workers. Humanoids will have numerous difficulties. Furthermore, even though they might not be the ideal answer, they are becoming a more and more important one in a world where there are many problems related to long life. However, it can take some time for the need for these difficulties to emerge. Morgan Stanley cautions that comprehending the humanoid theme necessitates a long-term time horizon and a multi-sector strategy. With all of these considerations, Nvidia is unquestionably a great buy, especially if you're looking to invest for the long term because the company hasn't reached its full potential yet. What do you think about Nvidia stock? Is it a good buy at the current price? Please share your opinions with us in the comments section. And don't forget to let us know what you think NVDA is worth. If you're interested in learning what other companies, like Nvidia, have been up to lately, click on the next video on your screen. We'll see you there.